Let's break down the fixed range volume profile, what all the different levels means, and how you can use it in the live markets with a case study at the end of a trade that we call live, using everything we talk about in this video. So first of all, when you draw the fixed range volume profile on your chart, you're obviously going to get this line here, and then you're going to get a curve. Now this curve indicates the volume. So you may have seen the volume at the bottom, where we get these sort of bars that tell us how much volume has been expended at each level. And what these lines at the bottom do, these are time-based levels. So they'll say, for example, here, 12:30, whenever it was, 12:30 there was this much volume, 1:30 there was this much, 2:30 there was this much, 3:30 there was this much, whatever. So that's based on time, right? That's the row at the bottom. What this is based on is price. So it tells us how much volume is spent at every single different level in price, right? And essentially you can see you're going to have these dips like this of low volume, and you're going to have these peaks here of high volume, and then dips and then peaks. And essentially, yeah, it's just showing you all the different volume that's been expended at the different points. And I'll tell you, obviously, how we can trade it, etc., going forward in the video. So the three main points that you're going to see on your fixed range volume profile is going to be your value area high, your value area low, and then your point of control, your POC. So the value area high, start with that. So the value area high and the value area low. So between here, this is where 70% of the volume was spent throughout the day or throughout the given period when you've drawn it on. So it could be quite a small area, it could be quite a big area like this. It can change, but essentially it is just the value area, the main area where price sees it as fair and is willing to transact to this area. So you're going to get price typically consolidate in this area, or at least show willingness to remain in here. It's unlikely that price is going to tap into it and run very far away, because as we said, price sees it as fair value, okay, and it's willing to transact in these areas. And then this brings us to the POC, the point of control. Now this is the singular point in price. So whereas this is 70%, this is the singular point in price where majority of the volume was spent. So I mean, yeah, pretty self-explanatory. But we see this as the optimal, the most volume. So that means we've now got the value area, which is this region here, and therefore we've got the value area high, we've got the value area low, and we've got within that we've got the point of control, right? And then obviously we've got our volume curve there. So they are the three main points that you need to know. And now let's break down how you actually trade it. How can you actually act at these levels? It's all well and good knowing it, but how do you actually trade at these levels? So first of all, as we said, price is going to want to remain in these levels. So when price starts reaching outside of these areas, there's obviously no volume, which shows us that price is unwilling to transact to this area. We don't see it as fair value. So what we're unlikely to do is get consolidation and price sort of remaining around that area, because the market's already proven to us this is a level that institutions find undesirable. It's not an optimal level for price to be trading within, and this is an optimal level for price to be trading within. So again, if we're trading higher, we'll typically, and we go above the value area high and outside of the value area, we're typically going to push back in. And where are we going to push to? Most likely the point of control. Same way if we trade out, we're going to be pushed back into the point of control. Again, if we trade out, we're going to be pushed back into the point of control again, because the market sees this as fair value where it can transact. Specifically institutions see this as fair value where we can transact, and these areas aren't. So if you're looking to actually how would you trade it, then you sort of want to fade these areas. When we come out of the value area, you want to fade these areas. Fade, and then fade. And obviously be targeting the value area. Okay. Now the other thing I want to bring your attention to, I will go a little bit into the point of control as well. The point of control is essentially an area where you expect price to remain for a long period of time. So I personally don't use the point of control for like specific trades that much. What you can do is you can use it as sort of like a retest level. So price is more than likely to sort of bounce off of these levels if you like. So price may bounce off like this, or we may be trading and it might bounce off. But I don't really use it too much like that. I just more use the value area, right? Because that's what makes sense to me. And typically the way I trade the London session, so we typically see these reversal moves come through. But yeah, the point of control, as I said, you can still trade it. You can still trade away from it if you want. But all I really use it for is to trade into, right? I don't massively look for trades away, okay? I want to see trades into it, right? And that's the key for this video, is we want to be trading into volume, right? So that's why it doesn't really make sense when people base their strategies on price trading away from it. Okay, we want to trade into it. Obviously, as I said, there's certain scenarios, and I've even got videos on my channel where it makes sense to trade price away from it. But as a general overview, just focus on price trading into these value areas. Remember, price is going to be attracted to these value areas, so focus on that mainly. And then I want to bring your attention to go a bit more in depth into the peaks and the troughs, I suppose you'd call them. So first of all, you've got higher volume nodes. So we've obviously explained this already, how price reacts to a higher volume node. It will typically see it as a target to trade into, and it will remain there for a long period of time. But how do we act at these low volume nodes? So you can see these areas where price has already told us it's unwilling to transact to this area. So let's highlight that area in red. So the market has already told us that it's unwilling to transact to this area. It doesn't see any fair price here. So price isn't going to remain there for a long period of time. So how do we actually trade it? Now, if the bears are in control of this, for example, and the market trades up, we can use it as a level where price will reject from. Okay, because price is happy to trade within this area. Obviously, there's fair value here. You can see there's volume here. But when we get here, again, price has already proved it doesn't see any fair value there. It doesn't see it as a viable point to do business, essentially. So whenever we tap in, we're going to get a fast rejection. Okay. Alternatively, if we're in a distribution move completely away, then the bulls are in control, then we're going to move through this area pretty quickly. Okay, we're not going to try to remain and slowly move through this area like that. We're going to quickly move through it, right? Again, because people aren't willing to participate. People aren't going to be jumping in trades at this area. It's already been proven. So if we're looking to reverse, then we're going to use it as a reversal level. And if we're looking to distribute higher, then we know price is going to move through it pretty quickly, right? So they're the main points. You've got our peaks, which price is attracted to. We've got our low volume nodes where price doesn't want to really do business at, and then we've got our value area high, value area low, creating our value area where again price is going to be attracted to, and you can fade these breakouts below. And then we've got the point of control, which is obviously the highest volume area where price is just going to be like a magnet to price. That's my little magnet drawing. But let's get into a case study using pretty much all of these things and how I caught a trade on Euro USD on pretty much it was the first trading day of the year, so it was a nice day to catch a trade. But we'll get into that right now. Right, so let's start off on the higher time frame, and let's first of all see, on a higher time frame basis, where is it likely that price is going to be traveling into? Where is price going to want to remain in, and where is price likely to just cut through? Okay, so by drawing this on, you can see there's two real clear points, or two clear higher volume nodes, right? We've got this here and we've got this here, right? This one happens to be in line with the point of control. Now, obviously, as we said, price wants to remain in these areas, so it's often going to be these areas here, okay, where we have consolidation. And we can also see here, we've got these low volume nodes, specifically here, what the price has just tapped into at the point of the trade. So this is 6 a.m. And you can see, so we've got low volume nodes here and high volume nodes at these consolidation points here. So that's not actually how we caught the entry. That's just a sort of general overview of how you sort of would know what we're trading into. So what I would essentially gauge from that is that this region here is sort of like, I wouldn't be looking for price to reverse here, essentially, right? Because we've traded already into it, so we know we're not going to tap into it and instantly reject and, again, remain in here, because you can see we've already fallen from the day open, we've already fallen 50 pips, right? So that tells me that we're leaving this area, but I'll go over that later. But essentially tells us, if we look to the left, this area is not really interesting to me. I can't really see us potentially chopping up and down, and therefore looking for like your typical Asia liquidity move up to this candle's high, or anything like that. I'm looking for price to trade through this, right? Reason I'm looking for price to trade through this is because we've got our two high volume areas. We've got this area here, and we've got this area here. And I'm seeing clear, if we drag this across, I'm seeing clear rejection of this area. You can see we've got rejection here, and then price falls 50 pips. So this tells me that price is rejecting this fair value area, and it's in search for new fair value. And where's it going to find the new fair value? Well, it's not going to find it here where there's fuck all volume, is it? It's going to find it down here, right? So I want price to trade down into this kind of region here, right? And I want price to really trade down into that. And that was sort of a pretty big confluence for me for sells, is that, as we said, I want price to trade down lower into this, and I don't think it's likely that we're going to get choppy sort of reversal price action. And that becomes more obvious when I actually go down into the 15-minute time frame, or the 30-minute time frame, sorry. So now we're going to turn on a few things. So first of all, we're going to turn on our Asia session. So now we can see a little bit clearer how price has acted at these levels. So we can see we've got fair value here, and obviously the point of control, and we've got the fair value here, right, with this area here. I'm not too bothered about the actual value area for this specific example. We're more looking at the point of control and the specific peaks in volume, of which there's two, as we said, clear here and here. So I want to see exactly what happened at these different price areas, and see what price is seeking out. So for a start, you can see we've got the New York session here, which is in yellow, London session here, which is in blue, and Asia session here, which is in green. So you can see we're kind of chopping about this area. You can see, as we said, price will not mind remaining in these areas of high volume. Okay, but what we can see is that we got a clear rejection. So we broke out the value area low, really. If we actually draw it on for the specific range, we can draw that on right now. So we mark on from here, basically from the start to the end of the consolidation, right? And we can see, if you just get rid of this drawing, you can see this is actually like the value area drawn on now. So you can actually see value area high, value area low. If we draw it across, if we draw this value area low across, we can sort of just have a better idea of this region. Let's actually draw it as a box, to be fair, as a more accurate box, so you lot can see. So you can see we came out of the value area low, and then we traded straight back into it, right? After we traded straight back into it, as I said, we was really attracted to this point of control. Whenever price would break above, we'd go back in. Trade below, would break back in. Trade higher, would trade back in. But what I noticed was, so we obviously faked out of it and then traded back within. But after that, the New York session then went on to distribute all the way to down here. And this is where we closed for last week, ending of 2nd of January. So we had pretty heavy 41 pip sell-off that traded us out of this value area yet again. So in the morning, after the Asia session's printed, I'm looking to see, cool, has price chopped back in here and confirmed that it is still happy at trading at this fair value? Has it chopped back in and is sort of here, and we're willing, as I said, to still be doing business in this area? Or has price fallen and confirmed that it's in search for new fair value, of which we know can be found down here and can't be found here, right? And what I saw, as I briefly mentioned earlier, was price moved 47, basically 50 pips to the downside, right? And this now confirmed to me that price has rejected this old value area, and we're actually going to be trading in to this, well, I say value area because we've drawn it out, but this high volume node has been rejected, and this next high volume node is going to be traded into. Again, we can do the same thing where we draw it out. So let's do that. So we got a little bit more accurate. So we'll go from here to here. You can see we've then got the value area a bit more specifically. There to there. All right, so now we've actually got the old, the two value areas properly drawn on. So you can see what I've basically done is we've already got our higher time frame area. We've identified this is high volume, this is high volume. We've then gone a bit more in depth and actually drawn on our fixed range volume profile onto this range and onto this range. So as I said, see where the actual specific value area is and where the point of control is. Right, so Now, again, referring back to what we're seeing currently, we've got this old value area has been left, in my opinion, confirmed by that sell-off. And this is the new value area that we're targeting. We said there's low volume. Remember, there's no volume in this point here. So it's unlikely that price is going to be chopping up to this Asia high and then chopping back down and then chopping back up. It's very unlikely. Most likely thing is that price moves quickly through this area. Price distributes quickly through this area, right? Or, as we said, could have potentially rejected off as we did previously. So essentially, that is my overall bias for the trade. Again, just to go over it one more time before I show you about the specific entry and how I use volume in the specific entry. But we see this fair value here as being left. Price no longer is willing to transact here. We can see through the 50 pip sell-off. And our next area of fair value that we know price should be attracted to is down here. So this is our overall target that we want price to trade into. So now let's actually break down the volume of the current day and how you could use the volume of the current day to catch the trade. Right, so now I'm going to turn on this indicator here, session volume profile. And this is essentially just going to draw on a volume profile for every day. So you can see there's one there, there's one there. And also, by the way, when you draw this on, you can see very well how the value area acts. You can see break out of the value area, push straight back in, break out of the value area, push straight back in. You can see for this sell-off here, broke out the prior day value area, got a nice sell-off, sort of found a new range there. Again, broke out the value area here, traded back in. And then this is, again, where we eventually ended up selling through it. So we're going to focus on the current day. And what I noticed, first of all, is bearing in mind we're looking for a sell. And we're looking for price to move quick through this area because there's no volume on the higher time frame. Okay, so we're looking for a quick move, a sell down to here. This is our target, and we've got all the narrative already sorted in our head. We want a quick move down, simple as that. All right, so the first thing that came to my attention was here, was this low volume node. So this area here. I'll mark that out in pink. So this area here. Now, the reason why this was significant to me was because you can see we're moving fast and we started to have a retracement. And as we said, price is unwilling to do business in this area. So you can see there's relatively high volume. And in fact, a decent portion of the retracement is in the value area. So there's decent volume here, which is why price is willing to sort of trade in and around this area. Whereas here, we know there's no volume, right? So if the bears are in control, as we thought they were, why are they in control? Because they've left this old value area in search of new value down here. We know it should be tapped and then instantly rejected. Oppositely, or alternatively, if we thought that the bulls were in control and everything we did prior was the opposite, we'd want this area to be moved through really, really quickly because there's no volume. We're not going to get like a slow retracement with these big wicks as we got here, right? So we had clear low volume. You can see that we had decent volume there, even decent volume here, I suppose slightly small here. But you can see this is the clear area of low volume where we expect price to reject, as it doesn't see it as fair value. Price is unwilling to transact in this area. People do not want to participate in this area, and essentially it's not a viable point for institutions to get in and place their orders. And then I look at more technically based, so I say cool, so we've got our low volume here, so we already know that. Let's move this across, and now I'm looking at it from a technical standpoint. What points of interest do we potentially have around this? Well, I saw very, very, very clearly we have a bearish fair value gap here. A 30-minute bearish fair value gap right here. Okay, so we've got that fair value gap there. And this is also a true fair value gap. Why is it a true fair value gap? Because there's a gap in fair value. As we said, the price doesn't see this as fair value. The proof's in the pudding. The fact that there's low volume here, which is why price moved through it so quickly. That's why price moved through it so quickly. You can see, opposed to other areas of fair value gaps that you'll see. I'm not going to go through and find an example, but where there'll be decent volume there, and you know it's not really a true fair value gap because price doesn't actually mind transacting there, and it's not necessarily a gap in fair value. But this is a blatant gap in fair value. It is a fair value gap. Why? Because price sees that as not a point of fair value, not a point where we actually want to trade. So this level here, which adding everything in, mainly the higher time frame, of we know that this area is being rejected, this area is being traded into, and the lower time frame being that we've got low volume here, so we think the end of this retracement is going to be here because price just isn't going to want to continue there, and then we're going to sell off. So that leads me to actually placing the trade where we have our sell limit here on the fair value gap. We have our stop loss. I think it was a 12 pip stop loss. The reason it was 12 pips is because I've just got it clear at this value area high. We could have had it tighter, don't get me wrong. You could have had it just above that candle high. And I suppose it is kind of down to preference as well. But for me, I had a 12 pip stop loss just so if price does want to just retest it and go like that and trade into this value area, we will be all right. As I said, you'll see from how it plays out. You could have had a tighter stop loss if you wanted. And then obviously, yeah, we have our take profit at this next area that we know price is most likely going to be wanting to trade into, right? So just there, about 29 pips, because we know price is going to want to be attracted to that area. So our entry makes complete sense, our take profit makes complete sense, and our stop loss is sensible. All right, and then if you can see how this played out, so we tapped in there, and you can see, look when we tapped in. Look when we tapped in instantly, instant rejection from that low volume point. Again, let's quickly drag across that low volume point. You can see as soon as we trade into that point of low volume, instant rejection. Price doesn't want to do business there. Price is not willing to transact at that point. And we can see that now again. There's no volumes came in since we tapped into that. It's not like new volumes appeared. No, it's remained how it has been, which is there's no fair value at that point there. And then you can see, if we continue playing it out, price traded really nicely down into that old fair value area. So that was the trade right there. And hopefully that made sense with a breakdown of what the fixed range volume profile is, what the value area high, value area low, and the value area, the point of control, your low volume nodes, your high volume nodes, and how you can actually use it to catch trades. Again, if you notice, now we can see in hindsight, we did break above the value area high. Obviously, it wasn't the case at the time, but you can see we did break above that value area high as well. And what do we want to do when we break above the value area? We want to fade it back into fair value. So here, obviously, it just so happened that we had a whole load more analysis, which told us target here, enter here. So yeah, I hope that made sense. I hope that made sense to you. If you want more videos on fixed range volume profile, volume in general, then just drop a like on the video. If this video gets 100 likes, as soon as it hits 100 likes, I'll bring another video out to you the very next day. As I said, this trade was caught on live, and I am live every day. So I'll put a few screenshots just so you can see. This wasn't a hindsight trade. This was caught fully on live with the guys, with the community on YouTube. And yeah, hope you found it useful, boys. And yeah, if you enjoyed it, drop a like. Make sure you subscribe. Tune into the lives every day where I trade this type of trading every single day live. And if you're trading sort of ICT, SMC style concepts and you feel like you're missing that final piece, this really could be it. This really could be it. So if you did like the video, drop a comment letting me know. Like the video and tune into the lives. Because if you're not already noticing this, you could be missing the trick. And this could be the final thing stopping you from being profitable. So yeah, hope you find use out of this video. And I'll catch you whenever I catch you. If it's in the next video, if it's in the live, if it's never again. Appreciate you watching. And I'll see you in a bit, boys.